right, so let's begin the show with the topic that's around Flexi-Cap. So a lot of our investors or viewers, a lot of times ask about having the right kind of placement of a Flexi-Cap fund in their portfolio, considering that you have large, mid and small cap in a Flexi-Cap fund. And apart from that, if at all you want to make a strategy of a pure mid-cap, small cap or any other pure market cap fund, how should you strategize having a flexi cap in your portfolio at this current point in time of the market? So let's discuss more on this. Today I have with me Tarun Birani, founder and CEO, TBNG Capital Advisors. Tarun, hi, good evening and welcome to the show. So let's understand the purpose of having a flexi cap fund, or the purpose of a flexi cap fund, which was earlier, there was a situation where the regulator considered to have a separate category other than a multi-cap, where there is no specific capping to a market cap. Talking about a flexi cap, you have large, mid and small, all kind of exposure in it. And how would you like to differ it from a multi-cap fund?
Good evening, Kavita, and thank you for having me in the show. So, talking about Flexi-Cap category, the most important objective of origination of this category was flexibility, right? This category gives the flexibility to the fund managers to move across category, across market capitalization, large, mid, or small category. Again, the attractiveness of flexi-cap basically comes from at various points of the market, various categories of the market do well, right? So this adaptive investment strategy is one of the biggest positive point about the flexi-cap strategy, because this allows the fund managers to shift allocation on market conditions and opportunities. Again, this flexibility doesn't inherently, one need to be aware that it doesn't give you inherent guarantee on a balanced exposure across market caps. When I look at data, and there is some very interesting data of across flexi cap funds available in the market, the average market capitalization is around 1,50,000 crores of market cap companies and above are part of the flexi cap fund. So this is largely tilting towards more of a large cap oriented theme if I look at the data points right now. So which is giving us the indication that this is more to more stability to the portfolio, because large caps are known to be more on the stability side, and mid and small caps are the one which gives the, let's say, higher risk, higher reward kind of spectrum. Yeah.
So as rightly pointed out by you, this is Flexi-Cap have now become a largely large cap oriented or biased funds. But then tell me something, it also depends on the fund manager's strategy, right? Is it compulsory for them to choose that kind of a bias, or they can shift it anytime? Because flexibility, as we know, is the biggest USP of a Flexi-Cap fund.
Yeah, so by nature, these funds have the mandate to move into any capitalization.
Right.
But maybe last 3-4 years of data what we have been getting, I think it is giving us indication that the tilt of flexi cap category is moving more towards large cap, because I think the benchmark and all those benchmark understanding of the flexi cap is also tilted more towards large caps. So I think that is again tilting them more towards large cap. But again, this has more to do with that fund manager individual call on the market outlook, risk appetite, as well as investment philosophy. According to me, every fund house or every fund manager has a very distinct philosophy, and this distinct philosophy helps him make view on the markets, develop portfolio accordingly, right? So again, some fund manager may be value biased, more contrarian in nature, right? So they will develop a flexi cap portfolio more aligned with that thought process. Some fund manager which are more growth biased,
so if you could just explain this with example, Tarun, because we are seeing, 1-year returns have been really good for most of these category funds. If you could just explain the fund manager strategies and allocation across market caps of these funds. If you talk about Motilal Oswal Flexi Cap, Parag Parekh Flexi Cap, PGM Flexi Cap are like a common name in investors' portfolio these days. How do you look at fund managers' strategy of these funds and the of returns they've been generating. I'm just talking about a 1-year return. 2 years and 3 years return definitely quite differ. So just going ahead on what you just mentioned.
So I will not be able to talk about fund specific because I'm not allowed to talk about fund specific pointers. But what I can talk more on a generic terms, that every fund has a very distinct philosophy, and based on that philosophy, maybe a fund A will have more large cap bias, fund B may have more mid cap bias, and I think ultimately the returns are a function of the risk they are taking. If we look at last 1 year, 2 year, 3 year, I think sector with high risk or the mid and small cap as a category, the mid cap index has given almost 55 to 65% return. And large cap, the Nifty has given 25% return. If I look at last financial year, so any fund manager in his flexi cap portfolio, it is like how much proportion of mid cap, small cap, or large cap they have built in. The returns have actually come based on that. So I don't think we can generalize this, but it has more to do with investment philosophy of that fund manager, which is going to ultimately decide. But one very important point, I think, which as an investor one need to be very careful about is their suitability. They need to review their specific portfolio. Is their existing portfolio more large cap bias, more small cap bias, or more mid cap bias? Accordingly, they can do a selection of a flexi cap fund because the data is readily available where we can see the tilt of flexi cap fund is more large cap bias. So accordingly, they can try developing or selecting a fund which is suiting their purpose. So that is my advice to them.
All right, so one definitely needs to see the kind of flexi cap they have in the portfolio, and then maybe go about deciding a pure mid cap or a small cap fund. But then talking about flexi cap and having a pure mid cap small cap fund, the exposures definitely won't coincide with each other, right? It makes sense to have a pure large and mid cap, or a mid cap or a small cap, if you have a large cap bias flexi cap, which most of them are seen around.
So, Kavita, I think you made a very, very important point. I feel you want more predictability, you want more certainty that if you want to build 50% of your portfolio around large cap because your risk appetite allows you to do that, my suggestion would be to take a pure large cap fund portfolio because a flexi cap fund can keep changing based on the market environment. So maybe it can dilute the purpose and suitability for the client. But I think some part of the portfolio, which according to me is a more tactical portfolio, say 20 to 25% of the portfolio, which I think based on a core and satellite approach of a portfolio, and the satellite portion of the money where the investor is okay to look at building up risk in their portfolio, or where they are okay that that part of the portfolio need to be aligned more with the market outlook. I think that portion can always be looked into this kind of portfolios.
All right, so that's the right way to have a flexi cap in your portfolio. Strategize it well, and because it's a flexi cap doesn't mean that you will be having appropriate exposure across market caps. So even if you want to have a pure strategy of having a mid cap, small cap, one can do it. And recommended by Tarun, it makes sense to have a pure large cap apart from having a flexi cap, which is largely large cap focused. Thank you so much, Tarun, for being on the show and helping our viewers with this today.